What is up, everyone? I believe we are on. Good morning, morning. Monday, September 8th. How the days do go by very quickly, and we're starting a new week. Last week was a partial week. Monday was closed in observation of Labor Day. And this week, what we got going on are a few little interesting things. Last Friday, we noticed that the market took a pretty deep dive into off the morning session, pretty much. U.S. non-farm payrolls came in at 22,000. Everyone was expecting 75,000, so a very big difference there, a pretty big miss. And the July numbers were downgraded; they were revised even lower. So this also raised the expectation for Fed easing. We've now moved on to look at this. This is from FedWatch Futures, the CME. We've now moved on to the expectations that rates are going to be cut very high, to a high degree, at least one cut, which is 25 basis points. There's a 90% chance that we are going to see a 25 basis point cut in September 17th, meaning not this week, but the week after. And there's even nearly a 10% chance that we see a double cut, so it's not out of the question completely. We saw that gold moved into all-time highs, bond yields dropped, and we saw that tech gained a bit, right, throughout last week. Some of the big components that were on the rally for tech were Alphabet and Apple, right? Alphabet surged on a favorable antitrust ruling, which revived a lot of the tech sentiment, but some of the names like Nvidia, which is a huge component in the overall market, is still lagging. BlackRock does note a softer labor market is amplifying rate cut expectations, even as inflation does stay stubborn, increasing economic uncertainty. And speaking of inflation, this week we've got some figures. We have CPI this week and PPI. Both of those are inflation gauges that investors and traders are going to be looking at pre-market, plus consumer sentiment surveys, critical for clues on the Fed's next move. And, right, if we do see even lower inflation figures, you're most likely going to experience a higher probability of even potentially a double cut in the market. We have Apple's big event, the iPhone 17 Air, on Tuesday. Apple unveils its latest iPhone model. Analysts hope that it breaks the stock's underwhelming post-launch track record. As we've seen, Apple is grinding higher, lagging behind a lot of big tech that has seen all-time highs this year, but Apple has not. We saw that gold expanded pretty heavily, and it continues its move into all-time highs. And now for these equities, let's take a look at what we got going on. So this is the S&P 500 futures. You can see them right here. What we got cooking is a move, pretty drastic move into all-time highs off of the jobs reports last week. Why did that initially happen? Pre-market, NFP comes out, non-farm payrolls, a huge miss in the jobs added on the prior month in August. Markets look at this as, wow, okay, well, the labor market's kind of softening. This is kind of what the Fed wants to see, and they have a higher expectation of cutting rates. So they say, okay, let's start buying the crap out of this on very weak volume. Enter heavy market participants off of the New York Open, and they say this is ridiculous. We're going to plunge this back. S&P goes from all-time highs, and it starts accepting into distributions lower, which opens the downside. Now, we didn't manage to break this massive. This is the main distribution that we're dealing with right now. 64, 60, 57, all the way up to 64, 97, 6,500. This is the main overall distribution. This is the main balance. I don't really know. What am I doing here? So, okay, this is the main balance. It's going to be a super ugly color. Whatever. I don't use this generally too much to draw. And we had a movement below within it that opens up bearish pressure on the day. Now, towards the bottom band of the balance, that's where we were looking for longs, actually. 57. If you guys were with us on Friday, you know that's where we were hunting those longs. So, massive balance over here. Very thin volume. This red string of volume is an unfinished auction that has a high potential to see a bid go clean it up. Where to? Around 65.15 and 65.30. 65.30 is a main area that I could see a potential lower high try to shape up. But right now, we're in a position where there's very thin volume to the upside, meaning that it could be a very easy grab by the buyers to go and clean some of this up before any of that sell side comes in. So what I'm looking for on the day, you can see the overnight on the S&P is a P-shaped profile with thin volume. What I'm looking at on the current session is this area. Here, maybe we can get rid of this. This is the main balance, obviously, blah, blah, blah. But this area over here, it kind of dissects, maybe you can say a bit lower, it kind of dissects where the thin volume drops off from the overnight and the prior day, as well as the balance top, meaning somewhere around 64.95 on the S&P. It's a very detrimental support structure for the buyer to say, okay, you know what, this is where we want to hold things out if we're going to see movement into all-time highs to go and clean up that very thin volume above us. The thing is, right, it's a very close level. We're not very far from it. Buy side really needs to start stepping in. Not too much volume traded on the overnight on the S&P. And the case for the sellers, right, if you're looking at this and you're thinking, well, I want both cases. I don't want to only look for longs. The bear case is honestly, you start getting heavy offers under 64.95, and what happens is prices accept back into this balance, and generally speaking, you're most likely going to see heavier sell side pressure to try and target the bottom end of that balance. So pretty much what I'm looking at is one individual level to see if we can actually sustain the momentum that's trying to take place and reverse that move that happened on Friday. Or are we just going to kind of continue into balances to the downside? So I do lean slightly bullish on this, right? The possibilities for a higher low are also there. On the S&P, you can see this is the weekly balance of volume over here from last week. It drops off very aggressively towards that 70 area. So it is possible around that mid 70 to identify a higher low, but it gets a little dicey when you start moving into the balance. So it's a very desperate area for the buyer to try to come in. So that's what I'm generally looking at on the S&P. If we start the week off and we take a look at NASDAQ and tech itself is a weaker component in the overall markets right now. It's a weaker asset. It's not moving into all-time highs like the S&P. There are more favorable sectors right now, and tech is lagging. But that also presents the potential opportunity for larger catch-up plays to the upside swing, especially when we're going into a Fed cut, right? A potential double cut. We're going into inflation data, which I'm not saying is going to be lower than expected, but the potential of it being lower than expected will really help drive the momentum to the upside on tech. Now, NASDAQ is a very similar type of scenario right now to the S&P. We have a major balance generally around that 610 area. The bottom band is around 330. You can see here we're trying to actually create a larger cohesive balance as new momentum shapes up in the markets, right? So you have the balance top from Friday is approximately 680, right? You have this area that's developing. You have a thin unfinished auction here on the NASDAQ, this thin red line of volume. It should be a very easy move for the buy side to get through. You can see on the overnight, they're already challenging that idea. And right now, as things stand, I would favorably want to see the drop-off of volume somewhere around 720, 730 on the NASDAQ defend, rather than coming into this low volume area that was created on the overnight. Meaning the buyers, if there's strength in the buy side between 710 and 730 on the NASDAQ, they'd want to really defend that area, sustain the current momentum, and see if we can get that drive higher, right? Targeting 820 and potentially even higher. 820 is going to be an area of interest, 820, 830 for the seller for a lower high. So I'd rather not prices break like 690, 680 on the NASDAQ, because then you're most likely going to come into the bottom band of the balance close to 600, where it's going to be a desperate move for the buyer. So realistically, yeah, even if we do climb down a significant amount, I'm still going to be looking for that turning point to go clean this volume up and to send NASDAQ into all-time highs this week in anticipation maybe softer inflation prints. So that's what I got going on. Last Wednesday, we streamed into the afternoon, power hour. A bit before that, we almost closed out the session on stream because we were waiting for hours for our beautiful long position to take place. Long story short, we're going to be doing it again this Wednesday, so I'll see you guys there. We'll be on YouTube Live, so mark that up, 2 p.m. Eastern Time. And let's get ready for the week ahead, the day ahead. Take it slow, take it easy. Let the market tell you what it wants to do. Sit on your hands until the opportunity is there, until your edge presents itself, and have a great